How's it going? Welcome back. It's Jonathan. Okay, so in this video, I'm going to try and keep it short and sharp and sweet and just get straight to the point today. So the unfortunate thing is I don't have my chart on me from last week for the Dow Jones because it's saved on a different computer. However, as we can see, the market, I'll try and draw on, we sort of had some levels around here that we were watching. I don't really know the exact figures just off the top of my head, but there was something like this. And then we had one down around here. So we were sort of watching to see how this would play out as it went into our X date, and our X date was around here. And the update is this. The market has gapped down, and a lot of people are looking at this gap down and starting to freak out on us right now. And I just want to say that this is possibly nothing to be worried about. And I could be wrong, but there's two reasons for that. And if I am wrong, we'll look to an alternative to try and find where our low is going to be, okay? And I'll show you how to do that. So the market has gapped a lot in the past, okay? Gapping is not an unusual thing for the market. However, there were some technical analysis guys saying that it's gapped down and it's broken old lows and it's, getting a series of lower tops, lower lows, etc. And that is an indication of a bearish market movement. And yes, it is an indication of bearish market movement. But generally speaking, this bearish market movement would not be happening around our seasonal or X date, which would be occurring around this time period, okay? And it has been seen in the past that when the market has done these crazy events and the emotions are running through the roof, that it is the worst time to be going against what you should be doing, which is possibly looking for longs and not shorts. Now, of course, I'm not telling you to buy the Dow Jones. We use this market just as a way to sort of gauge behavior, okay? So what I'm going to do now is I'm going to switch back because what I would be expecting, is the market to reverse over the next few days. That is what I would be expecting for that low to finally hit in. Let's go back to last year though. Okay. So this is last year. And what we can see last year was that the market was also trending down. It broke lows. It also had gaps. And the market did find a low, an all-time low for this period, 30th of September. And then it found another low, which was the major market low, 30th of October. Okay? And in that time period, it had another gap. Okay? So the gaps are not something that I'm worried about. Excuse me. So where to from here? Well, this is where we are cyclically speaking from where we are today. Okay, this is last year. This is where we are cyclically speaking if we were to take it in today. If the market is going to keep falling, that would give us 1, 2, 3, 4, 5, potentially 5 more trading days of falling prices before we get what's known as an anniversary date. Now, if I show you what an anniversary date is, it's essentially, if you follow anything again, let's go ahead and my time. Let's take a look at our time measure tool. And if we want to get an anniversary date, we would pull it out and we would essentially be looking for a 360-degree move. And that would give us an anniversary date. If I can get it exact, can't get it exact, of around the 30th of September. 360 degrees from your birthday. Let's say your birthday is on the 30th of September. 360 degrees, so solar degrees into the future, would bring you back to 30th September. That is an anniversary date. So if the market is going to be falling lower and it is going to bypass our X date, such as in the same market behavior that it did in the past, then that would give us the next time frame to be watching, which would be the 30th of September, okay? But you can sort of see very similar market behavior where the market is trending down. It is also breaking lows. So it's trending down and it's breaking lows. A little bit different in how dramatic that fall is. But I am predominantly looking or trying to find the bullish market behavior because I am bullish biased for this market and not bearish, okay? That means that when the market comes down, we're looking for bottoms. When the market moves up, we're looking for tops. So that's where we're at for that. Now you can use these solar counts, obviously, or anniversary dates for any high and low. Let's say, for example, you wanted to see what occurred, or the major high that occurred here on 5th of January. You might see if there was any repeat in time for that anniversary date moving into the future. So you'd go forward 360 degrees here. That would be that low there. And you might just move this around. If I keep the 360 degree pattern going, might say top to top. It's a low there, I get it. But this topping pattern here, this is sort of what you'd be looking at. You go low to low, and you go, market came down, reversed. This low to this low in here, this top, nothing there. You'd want to be doing it from major highs and lows. I think that the significant low down here is very important to watch. This one down, these two down here. And if you want to just train your eyes to try and catch these, okay? We're not getting our 360 anymore. Bit of an offset there. So low to high, if I can line it up correctly. Yeah, so that's just sort of how you use an anniversary date. Now there is a more direct method. I'm just giving you a quick example of how this would work. There's a more direct method where you'd be able to figure out the orb period and work within the orb to try and find those turn dates. So yeah, I won't bore you too much with that. We sort of get the gist of it. I'm just giving you the idea on how you'd actually look for an anniversary date 360 degrees into the future. Let's go ahead and close this off. Now let's move over to Bitcoin quickly. So one thing that we were watching in Bitcoin is also for that low, because primarily we're trying to see where the market would bottom out for the year. Just to re-explain the forecast for the year, we're not bullish on the end of the year. There is a little probability that the market is going to break this high this year, so I'm not looking for the market to move up into the end of the year. However, what I am looking for is for a form of bottoming pattern, because next year we would obviously create a new forecast for the year, and then we'll be able to gauge if the market is likely to be bullish or bearish for the remainder of that year. Now, right now, I think that the run for the year is over, and from here on out, we're trying to find out if the market's moving up or down. Now, I did have this warning period right here, and that was to suggest that if the market did find a top in this X date kind of period, which it appears, and until this top is broken here, it appears that we may have found a top, and that would start to signal that possibly, especially if these lows are broken here, possibly we might be looking down for the remainder of the year, or at least until another seasonal date occurs, possibly around October to November time period for our next seasonal date. So again, not bullish at the time period, especially given the market behavior. If we saw that the market had sort of ran up and bottomed, we might have been able to give it a push higher. But as we can see, the market came straight up into this time period we were watching and then reversed lower. So if we want to be bullish, the market needs to push, and it needs to push now. Okay. Let's go ahead and take a quick look at our squares now. Let me just clean up the chart. All right, so the market did come up and find a high on the 19th of September, right across this green square. And what that would mean is, oh geez, we were sort of looking at this last time. Let's go ahead and clean this up. What that sort of means is now we would definitely be looking for a resistance level on this square here, which would be the next green one. And if it breaks that, the next green one under it, okay, would sort of move to the next 360 degrees in the square below it. That's not saying that it can't move from green to blue. It can definitely move from green to blue, but the probability of it moving 360 degrees is higher than it is not occurring, okay? Where we sort of get this blue move here, straight through this blue move, straight through this blue square, up to this blue square. The probability of it making that sort of market behavior is high. Okay. All right, so let's go ahead and get rid of that. Take a look at seasonality. Seasonality for Bitcoin in September is generally bearish. We all know that. October tends to be bullish, with November being the most bullish. However, we can see that the bias, if we look at seasonally, is bearish. Okay. I won't go into anything else in that today. I haven't updated this for a long time, so I'm not expecting anything here, so we'll skip out of that one for now. Is there anything else that we can look at? Do we have any patterns? Let's go ahead and see if we can draw on some patterns right now. What we would definitely be looking for is a series of lower tops, and then we'll try and find if there's some form of pattern. Now this one here would give us two outcomes. The market moves up or the market moves down. Of course, we would also be looking to draw, this is a weekly chart by the way, looking to draw a trend line. The market has broken that trend line, so I'm going to make that a red one. That would be typically bearish market behavior. I'm just going to make sure that this trend line is drawn properly quickly. Yeah, I don't think it's possible to draw the trend line off this, so I'm not going to consider this a valid trend line, just because the rules of trend line are not meeting at all. But if that is as tight as I can get it, the market is still broken the trend line. Okay. If we look at our our rules for determining a trend, in case you don't remember what those rules are, let me go ahead and just pop them on. So we want 11 bars in the direction of the trend, with 12 or more bars confirming the trend. So what that means right here, let me go ahead and move this higher. If the market is going to be staging a new bear rally, we would need to start counting this downtrend. Okay. Let's go ahead and delete all this, make it a bit cleaner. So what we would do now is we would count 0, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. This is our lowest low right here. This is our lowest low right here. We currently have 11 bars in this trend right here. That means if the market does come down and it breaks this low here, so this is a weekly chart, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. If we get 12 or more bars in the direction of the trend, so we're now moving into the 12th bar or more in the direction of the trend, and the trend is confirmed right under here, that would confirm the bear market is in again. Okay, now that price is down below 25,000, so once it breaks 25,000, technically speaking, the bear trend would be in. Now what that means is we would then be looking for a bias on prices to be lower and not higher for the remainder of the year. Now there have been some times in the past, and I don't know if I can find it now, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, nope. Okay, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, no break. There's clearly a downtrend here, but the downtrend, what I'm trying to get at is there has been some times in the past that it has occurred and the downtrend has been short-lived. 1, 2, 3, 4, 5, 6, 7, 8, nope. Okay, sorry, I can't find it, but what can happen is the market can trend lower for maybe 3 or 4 or 5 weeks, and then that low would then be forming a bar 0, and we would count 11 or more bars in the direction of the trend to confirm our new uptrend. So the trend lower can be short-lived. It can be prolonged. It can be lasting for a very long time, but there's also a high chance that it could be short-lived. So we just need to watch that now, because any break, especially a close below this low here, would signal that a new downtrend is forming in the market, and that the bias to the downside would definitely be hit. And that is below 25,000. So let's take a look at our squares. we don't really have a square there. Let me go ahead and possibly see if there's a square sitting around there. Basically below this one right here, and I'll just pop it in a different color, which is 120-degree square. So a break below that, if it ever occurred. We haven't had much luck on this 120-degree square in the past, and that's why I hadn't been following it, but I'm just putting it on there as a level to watch now. We do get a few hits in and around it, but it hasn't been that significant that I kept it on the chart. Alrighty, so that's all I have for this video right now. I just wanted to give an update because a lot of people are starting to get a bit panicky on the markets. Essentially, what we're watching is potentially a break below this low, and we cross our fingers that it doesn't occur, I guess, if you're bullish. If you're bearish, and I'm not bullish on the market, so if you're bearish on the market, then that break below that low right there should give you confirmation that your bias is correct. And I am very concerned about what potentially happened here, okay? Definitely concerned. And if we line that up with, let's say, the 19th of September, if we just head over to Dow Jones quickly, 19th of September, there wasn't really a sinking up in price there, so we might be getting a slight divergence. The 19th was a low here, the 20th was a top. Might be a slight divergence in the markets here, but yeah, again, just want to reiterate, I would be bullish the Dow Jones, but I would be potentially bearish Bitcoin into the end of the year, and that's been the kind of stance for the last few months now since those tops are coming. So that's all I have. Yeah, I hope you found this useful and it is aligning with your analysis and theories, and I'll talk to you in the next video.